Macy's was clearly the worst, and it was the biggest surprise, and it was the biggest guide down. Target was not nearly as bad as the stock would indicate. It's just that there had been a belief from an August quote that Brian Cornell gave us that things were incredibly strong for the consumer. That was not the top. The top was soon after Jay Powell said the economy's accelerating. Not being facetious, it's really rather amazing, isn't it? Kohl's was a bit of a shift. They actually raised numbers, but it doesn't matter. It was 1.8. We was looking for 1.2. I think Kohl's is an overreaction, but and I think Target's an overreaction, but it doesn't matter because what Macy says is, listen, there's promotion, and if there's promotion, there's inventory, and if there's inventory, prices come down, and if prices come down, then earnings come down. All those things are happening for everybody except for Bed Bath because they may have actually hit rock bottom.
Rock bottom, yeah.
Down 85% from the stock's highs a few years ago. It was particularly surprising, Jim, to hear this out of Macy's because last time we heard from Jeff Gannett, the CEO, was on Black Friday. Here's what he told this show about the holiday spending season.
I think it is a very favorable consumer spending environment. Record low unemployment. I think consumer confidence remains quite high. Clearly, the customer is out there shopping. And I think that, we're going up against a positive comp in the fourth quarter of last year, as many of my competitors are as well. And I think everybody is ready for that.
Very positive. I mean, all the analysts picked that up. I guess something happened between Black Friday and now. And the question, Jim, I'm trying to figure out is it a Macy's problem or is it a consumer problem? Because the consumer was doing the best out of this entire. I mean, we were saying week by ISM, it's okay. The consumer's on fire. Spending is up. Wages are up. Unemployment is down. Very favorable environment. Is that not the case?
The stock market cratered. You could say that many of the parts of the stock market crashed after Jay Powell's comments. The trade war accelerated. I think the feeling in Washington deteriorated. I, again, am always suspect about the idea whether employment is a leading indicator or not. But what didn't jive is that if you did not offer off-price, meaning the level of Costco, which reported really good numbers just last night for the month of December, then you really just basically did poorly. Now, Kohl's is strip mall, Macy's is mall. We know JCPenney, some people were saying that was better than expected. Give me a break. Obviously, Sears is moribund. If you were in the mall, you didn't have good numbers. And unless you were completely off price, I really question how well you did. November and December turned out to be weaker than expected months, and they didn't correlate with the employment numbers. But the Fed's models all said that employment is the only thing that matters. I think what you and I and Dave have been talking about for a long time is how it didn't correlate. It certainly didn't correlate with KB Homes. It certainly didn't correlate with Lennar. So the employment number turned out to be not the tell. Amazon is more of a tell. Costco is more of a tell. People traded down, not up. Look at those categories of Macy's that were weak. They are typically high margins. Estee Lauder downgraded for the second time this week. That is the highest margin business. And look, when you start talking about expensive watches, I'm wearing an expensive watch, but it's not made by Breitling.
Yeah, all great points. Although there were cross currents here. I mean, Target, again, to come back to it, was strong. The November-December period, as we said, 5.7%. And so to Sarah's point, Jim, you do start to wonder, well, were they seeing better flow through, particularly online, than Macy's efforts at omnichannel? By the way, coming back to Macy's, because we didn't put it out there, they do take their guidance down. I said that, but let's just go through the numbers. It's now flat to 1% comp store sales. They had been looking for as much as 2.3 to 2.5% up. And comparable sales and net sales overall now seen down 2 to 0.5%. They had been looking for overall net sales of 0.3 to 0.7%. But
yeah, that's so
Target
important.
would have been up otherwise, Jim. I mean,
Kohl's guided up. The Kohl's number.
Right. Say again?
Kohl's guided up. Michelle Gass is doing a great job. She guided up. Right. But you know what, David? There are retail ETFs. They can bring things down. Macy's was very jarring. Kohl's has a reputation of being an absolutely horrendous trader. We've seen this happen again and again. I think Target's actually pretty interesting here because it's already come down a lot. If these were the semiconductor stocks, we've been saying this is why these stocks have been coming down. Let's buy them. I think you have to wait till the dust settles and some numbers are cut. Macy's, there won't be cut for the other guys. And Bed Bath, let's just be really clear about this thing. As Sarah said, look, this stock was at 80 4 years ago with a $13 million market cap and $11 billion in sales. Now it has $12.4 billion in sales with a market cap of $1.6 billion. This is the Amazon economy. Amazon wrecked the margins for everyone, and I think they wrecked the margins for Christmas, too.